Hi, this is Brent with Trade Therapy with another chart breakdown. This week, it is Wednesday, December 11th. We are talking about Dogecoin. We did our clarity spotlight on Dogecoin last week. We've been talking a lot about riding giants and about a multi-cycle wealth building and how getting involved at the extreme ends of the institutional business cycle really pays dividends. And so we put some thought to it and tried to think about what trade is currently out there that is really set up for a big move that is a really good example of what we're talking about. And we came up with Dogecoin. This is the swing trade that we identified in January of 2024. We do talk a lot about in trade therapy content about Wyckoff entries and exits. Wyckoff is really good at identifying these events that take place that kind of tip you off that institutional accumulation is not only happening, but it's finishing up its process, either accumulation or distribution. If this were at the top, it would be the exact opposite of this structure here, just inverse. Anyway, this was a swing trade that we picked up. It had backed up to the edge of the creek here. We liked it extending up into setting up a major sign of strength. So we got in to the trade at that point. It did come up. This is fast forwarding here into March. You see, this was our entry. We did hit our range. We didn't quite hit our little ellipses here, but we did see the sign of strength develop. So Wyckoff is really good at bottoms and tops, but Wyckoff is also not really good at, and you'll hear us mention it over and over again in trade therapy content, that Wyckoff doesn't do a good job of timelines. So you'll hear us say, don't hold any of these future events, don't consider them timeline specific. And the reason for that is because Wyckoff is really analyzing how institutions manage money. And one of the tactics that institutions use to their benefit is time, their timeline. They are willing to sit in trades a lot longer than retail investors are willing to stay in trades. And so when you see action like this where it sets a spring, it back tests the creek, and then you see a sharp advance and then a sharp retracement, they're trying to scare people out of the trade. So there's an old saying that is, if they can't scare you out, they'll wear you out. And so Wyckoff doesn't mix well with timelines because it has to take into consideration this wearing you out tactic that big institutions use to basically make retail investors bored and have them move on and give up on their trades before the institutions are ready to start their markup campaigns and moving price up out away from this range that they've just accumulated their positions in. We did also talk about a monthly chart here very quickly. A monthly chart on Dogecoin. You can see the last run, the 786 fib, which is where we're at right now. We're at the 786. We still have not broken all-time highs yet. At the 786, before breaking all-time highs, you can see that last run just blew right through it. That month it ran up to about a 14414 fib. You see it kind of consolidated for a couple of months and then extended all the way up into almost and just slightly exceeding a 272 extension here. The previous run at the 786 on a monthly time frame, it blew right past that, came up to about a 1272 Fibonacci extension before retracing all the way back to a 50 to a 5.0 down here before extending all the way back up and setting a high for that run right about I believe that's a 1.7272 fib. Anyway, from a monthly standpoint, this is where we're at. This is our second month at this level. Still got quite a bit of time on this monthly candle. If we jump over to today's chart, if we zoom into today's chart, we did see some activity this week. If we zoom into the daily chart, it looks like this ascending triangle is breaking down here. This is a false breakdown. If we back up to a weekly chart, we can see that we're still in the ascending trial range, that price came down and tested this bottom right here, this level right here. So this wick right here, this wick right here, this candle opened there, and this candle closed there, all at this level right here. So this is just back testing support. They are going to back test support until buyers step in, and buyers stepped in and pushed price back up into this ascending triangle range. There's still 4 days left on that candle. By the time that candle's done, it can break out of the top of that ascending candle range, and this run can continue. This is the development of that swing trade that we took right here in January of 2024. This is where we're currently at. Our first target is this 1618 extension at 413. Again, if you look at the previous runs, 1618 extension has been achieved in both of them. So this will be our initial target. We will be looking at higher levels depending on the strength that we see when it gets up to the 1618. So that's what we're gonna be tracking and what we're gonna be looking at. We did cover and talk about the sell trigger as the RSI, the secondary RSI peak that leaves bearish divergence in place will be our sell trigger. It'll probably be in here somewhere, and we'll see at what price level Doge is at when that sell trigger hits. So those of you in the trade, I hope last week's Clarity Spotlight was helpful, and hopefully this video was helpful as well.